There's a reason why for the last 13 years, startups overwhelmingly prefer to build on top of AWS. We have the largest number of services, making it easy for you to take on some of the biggest challenges with the smallest teams. We also have partnerships with the top VCs, accelerators, and incubators around the world, making it easier to secure your next round of funding.
I'm a solution architect with the AWS Head Start program. What we do is we work with startups in the education sector, and we help them build their services on AWS.
So We Power Tech is AWS's diversity and inclusion outreach program. The program is really twofold. One is to increase the number of underrepresented technologists within the industry, and the second is to provide a platform for them to be seen and heard.
If you're wondering how the AWS evangelism team might be able to help your startup, there are many ways. We're technically credible across our entire catalog of products, so we can help you figure out which services might be able to meaningfully impact your business. We also want to help tell your story. So if you're building something cool, we want to know about it and help spread that message to the world. So you might end up on stage at an event like AWS Summit. If you're a startup, you should also definitely check out the AWS Lofts. These are event spaces that are free to anyone with an AWS account. And you can treat them like co-working spaces, but the awesome thing about them is that we also have people like technical evangelists like myself, solutions architects that come and give hands-on technical workshops and sessions to help you learn how to more effectively utilize the AWS products and platforms that you're already building on top of.
We are a dedicated team of people that love startups, that we just want to come and help you with whatever we can, whether it be technical or business focused. We are here to help guide you and make sure that you do have a say in what's going on. We do get your feedback. We do bring that feedback to the service teams. That is what we're here for.
I'd like to say good afternoon, everybody. This is the 7th workshop we're having in this workshop series, and I'm Udoka Rishi-Sosubelo, the director of Startup Grind Enugu chapter. Startup Grind is a global platform of entrepreneurs, a global community that hosts several events in a year, specifically fireside chats at least once every month. Startup Grind is also it's all to helping entrepreneurs to grow by connecting them, giving them the necessary information that helps them to also scale in whatever they are doing. And today we are hosting the 7th workshop for the workshop series for the cohorts, 2021 cohorts of the HULT 2021 cohorts of the HULT Prize competition, or rather the cohorts of the 2021 HULT Prize competition. And then we have in our midst a very experienced facilitator in our midst. He is the owner, and then he's also the managing partner of Emeka Uzodimma and Co. Presented. Sorry, let me get this clearly. He is the founder and also the managing partner of Emeka Uzodimma and Co. audit organization. He is a dynamic professional with skills in achieving greater organizational efficiency and profitability, and also in reducing organizational risk through comprehensive changes to each department, ensuring maximum accuracy and also quality. He's very proficient in handling all financial operations, audit and insurance and tax planning, forensic investigation, and corporate financial management. He is also like I said, he's the managing partner of the organization called Emeka Uzodimma and Co, a group of chartered accountants. He served as a group financial controller of Green Gates Group, who are into manufacturing flavors and food ingredients, and also a stockbroker. Has also been into the bureau de change business, real estate and logistics. He foresaw the implementation of the new overtime policy to senior management. He is the group head and internal control, or had been the group head and internal control of Dow Trade Group of companies, manufacturers and distributors of building and construction materials. He is or has been the Executive Director of Finance and Admin at Erimo Community Bank Nigeria Limited, which is a microfinance bank. He is a fellow of the Institute of Chartered Accountants of Nigeria, FCA, licensed to practice as a chartered accountant in Nigeria, and Associate Chartered Institute of Taxation of Nigeria, ACTI. Please, our dear audience, welcome our very, very professional guest, Mr. Emeka Uzodimma. Sir, you're welcome to this workshop, sir.
Yeah, thank you, everybody. Yes, thank you for the opportunity to interact with you. Yeah, thank you. We have already wasted some time because as a professional, what I tell is time as a consultant. So we have eaten into the time allocated for this program. We have to go straight. We are talking about tax today. That's what you want me to talk to you on. And that is very, very important because the success of an entrepreneur is for him to know his obligation to the society and the government. And more so, when you have a limited liability company, it simply means that I've entered into partnership with government. At the end of the year, you assess yourself, government collect 30% or 20%, you collect 80%. That is why I also feel that tax is essential, because by implication, you are into partnership with government as far as tax is concerned. So without wasting much of your time, let me share my screen and we now discuss. I will also say that the issue of tax is not what you will just get in one lesson like this, but if you're able to have the material we are using today, it will be a guide. It will be a guide for you in all you are doing as far as your business is concerned. Please just hold on. Sorry, facilitator, I'm not seeing where to share my screen. My screen is on. It's you. Why did I share the screen, George? No, this. I've seen it, but I want to share this. How do I share this? Yeah. That's not the program. I don't know. What do I do? Yeah. That's shit. So go back. A minute. I'm not seeing it. It's not shared. It's not highlighting. Okay. That's not it now. That is still them.
You can see, you saw your screen.
But with the film, the area I want to share, I'm not seeing it. You are seeing my screen as per I'm coming. I'm coming. I'm coming. Let me. Yes, but I'm not sharing. I'm not seeing what I'm sharing. It's not sharing it. It's not sharing it. What?
Okay, it's on. Can see.
Yeah, I'm coming. Just hold on. Are you seeing it now?
Yes, I can see it's essential for tax computation and other related issues to a startup.
Okay. Yes, we are discussing the essentials of tax computation on another related issue for a startup. But many a times, the major problem the startup have is when tax auditors come, they will be thinking of how to liquidate their company. Now, let us look at introduction of what exactly is tax. What is tax all about? Whenever we talk tax, we are talking about law because tax is out of statute. Even in your clubs or association or even student union, you have to make a rule in your constitution how much levy or subscription somebody have to pay. It's also part of tax. But I also want to say that there are certain payments that are not tax. When you commit any offense and the law caught up with you, you pay fine and penalty, they are not tax. Once it is tax, everybody will pay. But assuming you are in a club and you come in or you have a due, you didn't pay, they penalize you, that is personal, it's not tax. So tax in trade in Nigeria is rather an expensive one. Why do you say it is expensive? It ranges from petroleum tax to kiosk and shops, individuals, companies, citizens, foreigners, manufacturers, and marketers, workers, pensioners, all affected, all pay tax. But this presentation is a summary of the ranges of taxes and levies applicable to Nigeria and the legal instrument by which they are charged. Because any tax that doesn't have any legal instrument is not a tax. This presentation is also prepared for general purpose and not to be taken as a specific tax advice. So I'm not making you a tax consultant, but I'm trying to let you know how you relate to your tax consultant. So except otherwise indicated, the references made here is from the law of Federation of Nigeria 2004 and as amended. Now, what exactly is tax? A new Webster dictionary tried to simply say that tax are charges imposed by government authorities upon properties, individual or transactions to raise money for public purpose. But this definition looks so simple, but in some areas at times in Nigeria, like personal income tax, tax are charged on communities, not only individuals. And tax are charged on transactions. And in that case, if you don't benefit from such transactions, you pay no tax. For instance, you go to a restaurant to eat and they say they have a consumption tax. You will pay it. But if you fail not to eat, you don't pay such a tax. That's why they say tax is transactional. So tax must also have a subjective other than public revenue generation. Like just of recent, Nigerian government have said from next year, imported cars will reduce from 35% duty to 5%. So they are not actually looking for money to generate, but they want to use tax to protect the economy. So you find many a times that some taxes are levied just to protect the economy, not just purposely for public revenue. But generally, tax is meant to be used for providing amenities. There's no organization that doesn't pay tax, but it depends on what you call it. If you pay tax in the church, you call it tithe. It is used to maintain the church and make sure that the work of God is going on. The same thing goes to government. So every society, even in the village, in the family meeting, you pay something to make sure that the meeting is going. Now, however, the benefit of contribution is not necessarily to be enjoyed in proportion to contribution by individuals. What that means is that if I pay a higher tax, the government doesn't owe me any obligation of building my streets. The government can build my street if it is in budget. They are not building it based on the amount of tax I paid. They are not building it based on that the social and so society pays higher tax. What does that mean? That the tax you paid, the usage of the tax becomes political. It becomes another decision. So that's just what it is. I would also like to put here that as I'm talking, maybe I talk fast, put down your questions in paper. I will give room to answer your questions. So generally, this is tax. Every society pays tax. We pay to government, we pay to individuals. What I mean to individuals now is that we can make a rule, like your NGO, you may have subscriptions you are paying, and everybody pays the subscription. But we are not discussing this as relates to public finance, which means as relates to government and what government is using the tax for, and the laws that authorize government to collect such taxes. Now, let us look at the general outline of the Nigerian tax system. In Nigeria, we have three types of government. We have the state government, the federal government, the state government, and the local government. All of them have taxes they collect. But the more pronounced is the state and the federal. The local government just have a revenue department. All the states collect their tax through what they call State Internal Revenue Service. The federal government collect their tax through Federal Inland Revenue Service. Now, how do you know when to pay to state and when to pay to federal? By Nigerian law, by a Personal Income Tax Act of 2005, amended 2020 by Finance Act, or 2019, but signed in 2020, the Finance Act. All personal tax, when I mean personal, individual, Victor, Carrefour, Keke, administered by state. All corporate tax by artificial individual, not natural individual, is administered by Federal Inland Revenue, except people in military and paramilitary. Individuals that are military and paramilitary are administered by Federal Inland Revenue. Now, who is a natural person? Who is an artificial person? I'm a natural person because I'm born by a woman and I have a father. But an artificial person is where you sit down and decide to form a company, Okeke and Musa and Co Limited. You see that it is a legal entity before the law, but it's not a natural person. Or anything relating to that company is administered by Federal Inland Revenue Service. That's just the difference. So let us look at the legal implication of personal income tax. The Personal Income Tax Act makes provision for imposition of tax on individual, families, business, trustees, communities, estates throughout the country. It is imposed based on source and residence. Now, let me explain something. When I was talking, I said natural and artificial person. And when I'm not defining this again, I now talked about business. When you form Victor Ventures or Victor Enterprises, in the eyes of the law, you have not created any human being. It is still a business, but it is under state internal revenues and services. But if it is Victor and Company Limited, it becomes an entity of its own. So any business without a limited liability still fall under State Internal Revenue Service, and it's been administered under Personal Income Tax Act. Now, I now talked that it is based on sources and residence. Very good. That at 6 states in Nigeria. And how do I know the states I will pay my tax to? The law says any state I have lived for 183 days in a year. Because I may be working for a bank, this month they transfer me from Lagos to Enugu, Enugu to Abakaliki, Abakaliki to Onitsha. The law says the state that will collect my tax is where I resident for 183 days. The law makes it so explicit so that I cannot be living in Lagos because I'm from Enugu state. I'll be paying my tax in Enugu so that I will help Enugu. It is by residence. It's also by source. It can be deducted from my salary or at the end of the year from my profit if I'm in business. Okay, that's that. Now let's look at how is this tax being paid. The personal income tax is applied on graduated scale and taxable income band as set below. What I mean graduated scale? It's not a straight percentage. It's not like if I'm earning 1 million a month and the other person is earning 300,000 a month, they will say our tax is 5% of our income. No. The way to do it, after some relief, which we are going to discuss later, the first 300,000 is 7%. That means if I'm earning 100 naira to 300,000 in a year, my tax for the year is 7%. Now, if I'm earning 400,000, my first 300 is 7%. The next 100 naira, which or the 100,000, will be 11%. The next 300 will be the next 500 will be 15%. The next 500 will be 19%. The next 1.6 billion will be 21%. After anything above 3.2 billion will be 24%. This means that my income will be calculated on a graduated scale so that my tax will be equitable to my income, not just on a flat percentage. That's how that is. Let us look at the minimum tax. The government made it in a way that no matter how, you must pay tax. Just like an adage says, no matter how small a shop taker is, it must be washed with soap. So, if the government have given you an allowance, that what you call a relief, we discuss that relief. If your relief is above your income, assume the government says you have a relief of 200,000 a year as a relief that you should not pay tax on, and your salary in a year is 100,000. The government said no, you won't go free. Give us 1% of that 100,000. That is, you must pay minimum tax. But there's a new law coming in effect. It will come in effect by next year. The Finance Act of 2021 is trying to remove minimum wage earners from minimum tax. But that has not come. It's still with the National Assembly. Now, how do we determine income? Benefit in kind. You are working in a company. They give you a car. They give you a house. The law says that part of that car and house, you pay tax on it. That's what they call part of your income is benefit in kind. Because anything the law allowed must be exclusively for the generation of income for a company before you say we will remove these expenses for tax. Now, if the company give you a car, you take the car to wedding, you use the car to go to club in the evening, you go to church on Sundays with the car, the law says 5% of cost of that car should be added to your income and taxed. The same thing goes with any other things you're enjoying except rent. Now the rent is determined by where you are living. if you are living in Abuja, the law says possibly 150 or 200,000 should be removed from the rent they are paying. The balance should be taxed. That's what we call benefits in kind. Please, as I'm talking, note areas you need further questions. So that means there's no free lunch in tax. You are benefit. That's what tax. If a company gives you a house and a car, and they're taxing you to minimum, you may decide to use your car and let them buy fuel for you, so that you not pay 5% of the cost as tax. That's just how it is. Now, let's look at business income. What do you call business income? We have said earlier that business also tax under personal income tax, but they are not limited liability business. The Emeka and Sons business, Uzodimma and Brothers business. The law says that personal income tax is applicable to business income earned by individual, partnership, trust, and under unincorporated entities. That's any entity not incorporated as a limited liability, which have identifiable place of operation in Nigeria. This is where many of the online businesses are hiding. They don't have identifiable operation. Their operation is on cloud, but the law have already called them. But before now, Nigeria didn't know that you can do your business in cloud, so they believe you must have identified operational place. Other conditions that create a personal income tax obligation for a business include the following. The individual, executor, or trustee habitually operates a trade or business through a person in Nigeria authorized to conclude contract on his trust. For instance, you are running an NGO, you have a trustees, and somebody is using your trustees to run a business. It happens in churches. The churches or the mosques may have a publishing house that's selling their books. They engage in commercial activity. The law says the dorsal trustees must be taxed. Their business aspects must be taxed because that is trade. The trade or business in Nigeria involving a single contract for survey, delivery, installation, or construction. For instance, somebody comes from Cotonou to do survey in Enugu. That business must be taxed. Even though it is a single contract, it must be taxed. The trade or business carried out in a manner which, in the opinion of the relevant tax authorities, deemed to be artificial. Yes, this is where they are bringing in the online business or something you do that is not on arm's length. The tax authority will determine now whether it will be taxable or not. The personal income tax so determined is payable to the relevant state tax authorities where the individual, partner, trust are resident. We have said before that this tax is based on residence. Now, taxable income. How do I know how much to pay? In the case of employment, income is in the case of employment income, a person is liable to tax under two criteria. If the duties of the employment are wholly or partially performed in Nigeria. Yes, if I'm working for an American company online and they're paying me from America, you cannot ask me to pay tax on it in Nigeria. So it must be wholly or partially performed in Nigeria. If it is an online something and they are paying me based on they will deduct my tax there before they pay me. Unless the duties are performed on behalf of an employer who is in a country other than Nigeria. So before my income is due to tax, my employer must be in Nigeria. The employee is not in Nigeria for a period amounting aggregate of 183 days. If you come here as an expert to work for 20 days, You cannot demand me for a tax. I must be resident for 183 days. But there's other tax they may ask me to pay, but that's not under this thing. Inclusive of annual leave or temporary period, absentee, everything must be calculated to be 183 days. The remuneration of the individual is liable to tax in that other country under the provision of avoidance of double tax treaty with that other country. Now, this looks a little technical, but I will explain to you. Our embassy staff, the employer is in Nigeria. They are working in our embassy in Washington, in London, they don't pay tax in those countries because of double tax treaty. They pay here. They pay to Federal Inland Revenue. They are part of the people Federal Revenue collect their income. But if what the law is trying to mean that I should not pay tax here, and at the same time they will deduct tax in the other country because of double tax. But each country must agree with the other country that they are doing what we call double tax treaty, so that whatever you pay there should be taken as what you have paid the other side. Okay. Sorry. Now, if the employer is in Nigeria, unless the employment duties are wholly performed and remuneration paid outside Nigeria, the employer may be in Nigeria and the duties are wholly paid outside Nigeria and the payment made outside Nigeria. Apart from diplomatic staff, the outside country, like if you are working in UBA, they post you to Uganda. Your employer is in UBA Nigeria, but you will still pay your tax to Uganda government because by residence you are in Uganda. Now let's look at, are there any relief? What do you call relief? If I'm earning 100,000, how much is government expecting me to pay? That's a relief. If you are earning 100,000, which is okay, 100,000 a month, which is 1.2 million in a year, the government says that you are entitled to 200,000 and 1% gross income, 200,000 consolidated relief allowance plus 20% of your gross income. In short, call it 21%. Gross income includes salaries, wages, fees, allowances, or other gain or profit from employment, including compensation, bonus, premium, benefit in kind. We have discussed what is benefit in kind before, gratuity, superannuation, and any other income derived solely for reason of employment. So this income now, you are entitled to remove 200,000 plus 20% of your gross income. The 1% they say plus that 1% for minimum income, minimum tax. You now remove it. Now, disable liability. If somebody is going, oh, sorry. If somebody is disabled, the government says that they will pay him 3,000 or 20% of his earned income. Anyone that is higher. If the person is, what he's earning is not up to 3,000, the government will allow him tax free. But if it's above 3,000, they will take 20% of that should be above 3,000. The government is also giving him that to maintenance of a wheelchair or clutches or whatever, or if it is a blind person that employs somebody to bring him to the office, and go. So a disabled person has an additional allowance of 20%. Now, if you have a life assurance policy, it's another way to avoid tax. Any premium you paid in life assurance is granted as a tax relief. But that life assurance must be for your life or for your wife's life. Not that you do life assurance for your dog and you want to collect, or even for your children, it's not allowed. So it must be, so whenever you want to reduce your tax burden, take a life assurance policy. Even though you are paying 100 naira a month, that 100 naira you are paying will be removed before they tax you. Interest on mortgage. If you borrowed money from a mortgage institution to build a house you are living, not the one you are renting, no, the one you are living, the government says interest on that loan will be removed before they determine your income for tax. Interest and dividends. Interest earned from treasury bill, there's no interest, there's no tax on them already, it's already exempted. But other interest you earn from dividends, from other investments, financial investments, the 10% withholding tax you pay there is the final tax. It will be franked back to calculate your total tax. Then reimbursement. If there's any expenses you have done on behalf of your company, that the company refunds you, it's not taxable, it's not part of your income. Please, hope people are hearing me. Hello? Can you, yeah, I hope everybody is hearing
very
me.
clear, sir.
Yes, sir.
Okay. I just want to know. Yeah, please jot down your questions as we go on. Now, other reliefs and deductions. There's something we call National Housing Fund contribution, National Health Insurance, National Pension Scheme. All those ones, they will be removed from your income. So when all these things are removed from your income, whatever remains is what is taxable. It's not that when you are earning 100,000, they tax you 100,000. All these things will be taken into cognizance. But when all these reliefs are above your income, that is when you pay 1% minimum tax. Now, let us look at how do we pay tax? Is it if I wake up in the morning, when would they say I have refused to pay my tax? Or is there any timetable for payment of tax? Remember, I'm quoting the sections because I told you before that tax is all about law. The section 413 says that individuals are to file returns no later than 31st March of each year in respect of the preceding year. What does that mean? As a person, after New Year, by 31st March, if I have not paid my tax for the year, it's already late. And by law, I have a penalty, which is called a penalty. As a company, they deduct my tax from my salary. The 10th of the other month, they must have remitted my tax. Now, that's what we call filing of returns. When you remit my tax, you file a comprehensive returns at the end of every year to let the company know that this year 30 staff worked with us, so the total money we deducted from them we have already remitted to you, or this is the balance remaining. Companies will do that on or before 31st January of every year for the other year. Like all we are doing in 2020 must be done by 31st January 2021. But for individual, every 31st March, before or ending on 31st March, I will go to tax office and fill what they call tax assessment form. That is where I will declare my profit. I have to declare it and then pay the tax as per the relief, or they will not give me assessment. I will go and pay. Now, due date for payment, payee must be remitted on or before 10th of day of the month following the payment of salary. Now, for individuals, I may decide not to pay anything throughout the year till 31st March or 90 days after the end of the fiscal year. And fiscal year in Nigeria and calendar year is the same thing, 1st January to 31st December. Now, if I refuse to pay my tax as an individual, as a person, what will happen? This is where a businessman should pay attention. If you fail to pay your tax, government have what they call tax auditors, and the consultants like me, they will send me to your company. I will check how many years you are owing government. The penalty is 10% per annum of that amount, plus interest on annual basis at the bank lending rate. And almost all states now, because oil have no money, have engaged accountants, many of them. In short, they will ask you to go and be looking for company. So if you are a businessman, one day you see a letter from Enugu Internal Revenue Service that I come for tax audit. And what they are looking for, all the taxes you didn't remit, they will calculate interest and penalty. Now, we say that you must file your return by 31st March as an individual, and the company must file by 31st January. If you fail to file these returns, the law says your penalty is 500,000, it's fixed. There's no computation. So, what do you do as a setup to avoid this? If you manage your tax, you can pay minimum. Your tax in a year may be 300 naira, maybe 300,000, it may be 2,000. Provided the government didn't come to you, you assess yourself. But if you now wait for them to come to you, you find out this penalty. After calculating it, you will change state. Maybe if you are in Enugu, you will change the Ebonyi state, because it will be so huge that it will be difficult to pay. And by the law, anything on tax is economic crime. They can use either EFCC, ICP, anything to chase you around. The only problem we have in Nigeria is that the enforcement, though it's like in Lagos, you don't play, but some states, they're still enjoying, but we are getting to that. That's why when you go to bank, they say, what's your TIN number? When you pay any money above 5 million in your account, the tax office are seeing it. Before now, they are not seeing it, but now everything is computerized. Now, as a setup, what do I do to run away from this tax problem? This one is not, I have to tell you verbally as a consultant. When you are in business, place yourself on salary. Don't say it is my business account and my account are the same. Determine how much is your salary. If the tax office comes, show them your bank account where you are remitting your salary. You can remit 50,000 a month there. It's you that is running your expenses. You know how to compensate yourself. Print it out in 50,000. Then all the reliefs will be done on it. Then whatever is your tax, you pay. But when you do nothing, you are at the mercy of the tax auditors. And your inability to do anything can close your business, put you into litigation, embarrass you. But the laws are strict, and just when you do this, file your returns or find somebody to be filing your returns, you face your business. That's no problem. Many companies has gone under because of their tax liability. Because when they calculate the penalties, they cannot pay. The next thing they will do is they start doing like our forefathers. When Land Rover is coming to the market, all the men will jump inside the bush. Now let us look at company income tax. We have finished all about individual. Like I said earlier, once a company is incorporated, it becomes a legal entity and is treated under Nigerian law as an artificial person, separate and distinct from the shareholders. So once you form a company, you have created a human being. The naming ceremony of that human being is the name of that company. That means the implication of this is that here you have entered into an agreement with government that this company, whatever I do in a year, the government has 20 or 30%. We are coming to that. The 80%, the 80 or 70% is my own. But the advantage you have here is that you do what you call self-assessment. You assess yourself and pay government. How do you assess yourself? Through your audited account. Your auditors will prepare your account, compute your tax, whatever they compute, you pay. If they compute 5 naira, you pay. The only thing is that still other 2-3 years, government will come for audit to check your book. If you are not able to hide well, or you hide well, or however you do, whatever they discovered, you paid additional, but you are compliant. But where you are not assessing yourself, you didn't know that you are partnership with government, you also enter into trouble. Corporate bodies are charged to tax under the Companies Income Tax Act. However, while Nigerian companies are taxed on their worldwide income, foreign companies are liable only on the portion of their profit which is attributable to business operation carried in Nigeria. What does that mean? UBA has branches all over Gambia, Uganda, all over. Whatever they make in all those branches, they are taxable in Nigeria. When they prepare the account here, we collect their tax. But if a foreign company that has no residence in Nigeria comes here to perform, possibly do oil servicing, we only charge them for the portion of that business, the profit they made in Nigeria. But for a Nigeria company, we charge them. So far you say your base is Nigeria. Whatever you make in UK, United, anywhere, possibly you are paid and taxed there. Any income you derive from dividend or whatever you are bringing into Nigeria is taxable. Now, let us just run summary. The Finance Act of 2019, which was signed into law in 13 January 2020, contained various tax changes with effect from 13 January 2020. I summarize them here. It covers every other thing. Because if you want to discuss tax, all the taxes, you may even forget from where I start. But these are the basic things that I feel is okay for a startup. Now, what are the new rates now ruling for income tax in Nigeria? The new rate is this. A small company. What do you call a small company? If your turnover is less than 25 million, that is your invoices to third party, all your sales to third party is less than 25 million. Nigeria now, your tax is 0. You are exempted from tax. But you must do your tax returns to show that it's 25 million. Your auditor must prepare your account. You go and submit in the tax office, and to show that your turnover is 10 million, 15 million, 24 million, 500, or 24 million, 900,000. There is no tax. Or even 25 million, no tax. But if it's 25 million, 100, you can put tax. Now, medium company, if your turnover is 25 million, but less than 100 million, your tax rate is 20%. Then a large company in Nigeria, is your turnover is 100 million and above. After removing all your tax reliefs as a company, your tax rate is 30%. Now, exemptions from company income tax. In order to encourage agricultural business, attract investors to the real estate sector, and encourage growth in Nigerian capital market and export, the profit of the following type of business will be exempted from corporate tax. If you're an agricultural business in Nigeria as a company, you're exempted from tax, whether your turnover is 1 billion. The only issue is that you must file your tax returns. You must have your audited account tax, but your tax holiday is only for 5 years. Upon satisfactory performance of agricultural product, the holiday will be extended, renewed for another additional maximum of 3 years, which means if you're an agricultural business for a good 8 years, you are running on tax-free economy. But the company will not be granted a similar incentive under any other act, such as pioneer status, Now, why I mentioned the pioneer status. What is pioneer status? If you have anything that nobody has done in Nigeria, and you are doing it in Nigeria now, you ask your consultant to file for a pioneer status for you, because you are the pioneer in that line of business. The law says that you will be given 5 years. Nobody should disturb you of that, because you are doing something that is very new. When MTN and the Econet came to Nigeria, we don't have a GSM then. They filed for pioneer status. After 2 years, government saw their profit. Government said, we will not agree again. No, we must pay tax. Because there was no there was no this thing in Nigeria. There's no GSM. So they filed pioneer status. But after 1 year, government saw the profit and they said no.
But sir, is it not wrong? I thought agreement was agreement. Since that not last 5 years.
It becomes a judiciary issue. Go to court. But for us, we no agree again. So that's just what happened. So what am I trying to say here? There's a lot of tax incentive if you know. If there's anything you are doing new, like Uber is coming from abroad, assuming that it's a Nigerian that discovered it, you have a tax holiday for 5 years. So if you have these tax holidays and you're also an agricultural company, that you not enjoy the two, you cancel one. The other one is 8 years, this one is 5 years. It's left for you to know the one to cancel. Real estate investment, in line with the government objective to bridge the gap in housing needs, a new tax incentive is introduced to investors in real estate. A real estate investment company is enjoying tax exemption or withholding tax from dividends and the income received by it. Provided 75% of dividends are rental income. What does it mean? There's something we call withholding tax. What's withholding tax? If I supply some stationaries to the Ministry of Education in Enugu, and the cost of my supply is 100,000, the law allows the ministry to deduct 5% of my invoice value as a withholding tax. They're holding this, they deduct this 5%, give me a receipt. At the end of the year, if my tax is less than what they have deducted, I will not pay it. I will submit my receipts and they will net off. The balance, I will carry it up to the next year. Now, the law then says that real estate companies, instead of charging them withholding tax on a dividend they pay to their investors, that they should pay them their full money. And the 75% of those dividends, it must be from rental income. That is, they build house to rent. Now, regulated securities and lending transactions, these are for stock exchange, and there's also some category of assets in capital market. They remove the withholding tax issue. These are tax incentives. Then profit on digital transaction. Okay, digital transactions and services rendered by non-resident company. Profit on digital transactions as defined in subsection 1C of section 16 of the CETA, that's Company Act, and significant economic presence in Nigeria will be deemed to have been derived from Nigeria and will be taxed in Nigeria. Why are we saying here? Before, they said, remember what I'm reading before, that the company must have a notable address. But I have noticed that many companies are now making money through cloud in Nigeria. Amazon, call many of them, even the Google, there are certain things you will do, they will charge you. Now, they now say if they have significant economic presence, it's only government will define that. You will not be taxed. Fees held on fees held on transactions on technical management, consultancy, or professional services rendered from abroad to a person in Nigeria to the extent that the company has significant economic presence in Nigeria will be taxed. The extent of significant economic presence will be defined by the order of the finance minister. The finance minister knows whether your economic presence is there or not. But before now, we were working on physical presence. But with effect from 2020, we have known that if you are looking at physical presence, like I'm not in Enugu and you people are hearing me, I can still be in UK, you are hearing me. So because of that, the law have changed. So what are the expenses derived in tax exempt income? We have already discussed tax exempt, people that we exempt from tax. We now told you that the digital people are done to be taxed. Any expenses incurred in driving tax exempt income will not be allowed for income tax purposes. So if I'm in an agricultural company and I've exempted me from paying tax, and all the vehicle expenses I run in agricultural company, I now want to use it to write off my tax in my construction company. Government said no. We have asked you not to pay tax in agriculture. That includes all the expenses you have done there. You should bear it. Don't try to take it another place. In view of this, expenses of this nature should be segregated from other expenses so that the Federal Revenue Service would not use its discretion to determine the expenses that will not be allowed for tax purposes. You better do it yourself. If you allow the Federal Revenue to do it, it may not be palatable for you. Additional expenses that could not be allowed for tax purposes are, I've said it when I was starting before, penalties or any fine you paid, tax or penalty paid on behalf of another person and all that. Now, expenses involve related parties. What do you call related parties? Husband and wife is a related party. They cannot transact on arm's length. If I have two companies that are dealing, one is manufacturing, the one is distributing, it's a related party. Any expenses incurred within or outside Nigeria involving related parties that is not in compliance with the transfer pricing rules will not be allowed for tax purposes. Now, let me explain this. We don't have steady power supply in Nigeria. Majority of the manufacturers in Nigeria, like Levi Brothers, shifted their manufacturing of close-up to Cote d'Ivoire. And they now manufacture it to Cote d'Ivoire and shift it to Nigerian, Levi Brothers Nigeria for sale. You now find that Levi Brothers Nigeria and Levi Brothers Cote d'Ivoire are related parties. So any expenses that they have incurred relating to this transaction will not be allowed for tax in Nigeria. You may be looking a little technical, but ask me your question. Now, what we don't look at tax bonus. In order to encourage early payment of corporate tax, the Finance Act reintroduced tax bonus. It was there before, later they moved it then came back, which was abolished in 2007. The rate as follows. You know, your tax for a medium company is 20%. But if you make your tax returns early enough, before 6 months after the end of the year, it will be 20% minus 2% again. Your tax will be 18%. Then if you are a large company, it will be 29% instead of 30%. But this bonus will not be deducted by you. The bonus will be available as a credit to be utilized against the future tax. You must pay your 20% this year, and then the credit you have for paying early, that 1%, you enjoy it the other year. So that's what the bonus is all about. So the bonus will be available as a credit to be utilized against future tax, provided the tax due is remitted within 3 months after the company's accounting year end. What does that mean? If your year end is December as a company, you are expected to file your tax return before June. After June, if you are not filed, it enters penalty. But the law then is saying that if you file around March, you enjoy 2% as a medium company. If you file before March as a large company, you enjoy 1%. But this thing will come as a credit to you, not that you will deduct it when you are filing. Yeah, let's look at this rule. Commencement and cessation rule. I look at it that it's important to start up. When you are commencing business, you have some, let me call it tax advantage. The law gives you a room to wait for 18 months and prepare your accounts and then choose how you will pay your tax. The tabulation is here. From the first date you commence business to the end of the first accounting period, the tax is there. From the beginning of the end of the said period, it's a little technical, but what I'm trying to say here is that you have the right to elect how you will pay your tax. But when you are ceasing business, that right you have at the beginning, the government does not have the right how to collect their tax because they know you are dying. So in cessation is opposite of commencement. Let me end it there. That's just what all this grammar is all about. I gave an example there on what it is. For example, a company commencing a business in April 2020 and prepared the audited financial statement to 31st December. Its first year of assessment will be 2021, which will be based on our audited financial statement for a period to December 2020. Its 2022 and 2023 year of assessment will be based on its audited financial statement for the ended 2021 and 2022 respectively. What the law is trying to do is to give you room to operate for some time before you start talking about tax. But when you now tell the government, I'm no more doing business, I want to cease, this thing you enjoy at the beginning, the government will enjoy it. When we are talking about individual, we talked about minimum tax. The company, that's also a minimum tax. Before, the minimum tax is calculated on turnover, on net of assets and other things, or frank investment. But I just want you to know, how do you get minimum tax for company? If a company run for 3 years and have been declaring loss, every year loss, the government says after the 3rd year, you compute a minimum tax, you should pay something. Because it's you that is managing, and we are partners, and we are enjoying 30%. You should enjoy 70%, but you have been taking 100%. But remember that any small company, or agricultural company, or those companies not exempted from tax, also exempted from minimum tax. Now let us look at pre-operational levy. That's something that was going on in Nigeria before. If I form a company, I will tell government that I'm here to operate. I'm not operated, I'm not started. That I'm for the company when I'm in civil service. When I retire, I will start. The government will say, okay, now you have not started, you bought 25,000, we give you tax clearance. With the new finance act, that pre-operational levy has been abolished. There's nothing like that anymore. which means they will tell you that's nothing like that anymore. When you go to tax office to collect your tax, they say you should go and start business. If you know you're not yet ready to start business, why do you incorporate a company? But by eyes of the law, they say it has abolished. You can go and collect your tax clearance. But as a practitioner, I will tell you when you get there, they will say go and prepare account. If you know you don't want to do business, why do you register a company? Because there's some companies that are trading, they are telling tax office yet of bread, and they will pay 20,000 and 25,000 in suspect year, and they are 25,000 and 20,000 in suspect year, and they have been operating. And the new tax law, there's also new tax incentive, which we have already discussed. Interest of foreign loans, loss on employment, capital gain tax. Okay, let us discuss this capital gain tax. What is capital gain tax? If I build a house that cost me 2 billion or maybe 20 million, sorry, and I sold the house for 25 million, the government said I should pay capital gain tax for the 5 million because the house cost me 2 billion. Possibly or 20 billion. Possibly I renovated the house with another 2 million. I will remove it to pay tax. But where the law was not considered is loss of employment. Like when NEPA was privatized, the staff, they all lost employment, and because they lost employment, they were, how do I say it? They were paid some money. The law says before that once you remove 10,000 from that their payment, you tax the balance. But the new law now says it is 10 million, not 10,000. So if your loss of employment compensation is 10 million, you go home with your money. If it is 9, you go. But if it is 11 million, you pay capital gain tax on 1 million. Now, because of this recapitalization on insurance companies, banks came into amalgamation, the capital gain tax was also adjusted for what do you call it? For measured acquisition. Now, all of you must have been suffering this. You have received an alert from your bank, stamp duty charges. Any transaction above 10,000 in Nigeria now is attracted to stamp duty. Before, stamp duty is being collected by post office. Now it's collected by Federal Land Revenue. And this stamp duty is what is just like government sale on agreements on this but the law now has made it that it is one of the sources of revenue of government. Now let's look at the value added tax. Sorry, that's not in there. So value added tax. What is value added tax? It's just a sales tax. But for a startup, I want you to know that value added tax is in and out. If I'm buying, maybe I'm distributing pens, and I bought some pens for 100,000, and I paid VAT of 5,000, which means I paid 105,000. And that I sell the same pen for 110,000, and I receive VAT for 7,000. The law just says that I should remove the VAT I paid when I'm buying the pen from the VAT I receive when I'm selling the pens. The 2,000 on top is what I will remit to government. The 2 naira on top is what I will remit to government. I'll be to 2,000. But many people don't understand that. They fear that it is their total sales that we remit to government. The new law also increased the VAT rate from 5% to 7.5%. The law also exempted small companies. Any company that is less than 25 million, that the distance is less than 25 million, is not to pay VAT. Now, I want to specifically go to this penalty. If you fail to register or do your VAT returns, the penalty now is 50,000. That is where tax is very, very important if you want to be an entrepreneur. Government doesn't collect any money for you to register. Government doesn't collect any money for you for return. You can even waste their document. You can get and say VAT, nail. You can submit it, they stamp for you. But if you fail to do your return, the first month is 25,000, 50,000. Subsequent month at 25,000. You find out that by your own not managing your tax, you have already started closing your business every month. Now, if you fail to notify the government that you have changed your address or that you have ceased business or trade, it's 50,000, and the suspect meant 25,000. Then if you fail to submit VAT returns, I've said that earlier, and these VAT returns, you can waste government documents. You can say them, I didn't sell anything, nail, they'll stamp it for you. But failure to do that alone, you are paying penalty. And if you check, you didn't do it for 1 year, 50,000 for the first month, 25,000 times 11 months, you will know how much it is, plus the penalties and what have you that will come in. What else? That is what I can, because of the level of time and what you can assimilate, that is the summary of what is so important for you as an entrepreneur to know about taxation in Nigeria. Thank you.
God bless, sir.
Yeah.
Thank you, sir.
Then
Yeah, so please let's appreciate our speaker.
Thank you, sir.
Yes.
I thought you don't have any questions.
Yes, there are questions, so it will be asked also. So go ahead with your questions, please.
Okay, I want to ask, like, paying of tax is not actually.
Wait, it's okay. Ezekiel, hold on. Sir,
Okay.
sir, you need to stop sharing screen, sir. So I will be able to see you.
Okay.
Okay. Okay, Ezekiel, go ahead.
Okay, concerning the tax payment, for a responsible entrepreneur, you're meant to pay your tax. My question is, this tax you are giving to the government in Nigeria, what are they going to use the tax to do? Because actually, I don't see anything. I feel they are embezzling this tax money. And can't you not find them, like find the government to court, like, sue them for abuse of tax funds?
Yeah. Let me answer you in this way. You don't solve any problem by creating another problem. As government is embezzling tax, you can also avoid paying tax by becoming unemployed or not do any business, so that they will not touch your money. So, but the issue now is, yes, how are they accounting the money? There is nowhere in the world a citizen as a tax practitioner, there's nowhere in the world we got a citizen start complaining about what the government is doing for him. Nigeria is not an exception. But we are not talking of what will the law will do you if you decide to do business and say government are not doing anything for me. They will use as an scapegoat. So the issue there is you have a choice. Either to be a Nigerian, do business, use the law to know how to manage your tax, because you can manage it. Or don't do it, and then let's see how you fare with it. You don't like saying because your pastor is not accounting for tax, you will pay again. What
I'll go to another church.
Okay, that's interesting. Okay, that's okay. That's okay. That's okay.
Okay, so I have two questions. Others, I believe others also have a question. But I want to. But first of all, the camera. You need to shift maybe your laptop or camera a little bit towards your left, so we see your full face towards your left. A little too. Okay, I think it's okay. So then again. Okay, sir. Okay, sir.
Yeah.
Then the tax exempts that has been given to agribusinesses for the first 5 years of their resumption of business. If, for example, you are not going to indicate your tax return or submit your tax return, even because they are meant to submit their tax return even though they have exemption, right? Okay, so if they don't do that, are they going to be taxed the 50,000 naira and 25,000 naira?
Once you don't file your returns, it's already
okay. So even if you are a formed individual,
even if
like if you mentioned individual born by woman and formed individuals, for example, an enterprise, not a limited liability company, are you supposed to?
Now, if you are filing under Udoka or Tubel, not Udoka or Tubel farms, and you registered with CAC, if you are farming under Udoka or Tubel, you don't have any tax obligation to filing returns. But if you go to CAC and say Udoka or Tubel farms, and they give you they give you a certificate of registration. As we wait, I'm coming. As we don't go to
not limited liability company.
No, I know. I didn't say limited.
Okay.
I said they give you a certificate as Udoka or Tubelo Farms. You go to bank and use this Udoka. I use this Udoka Farms receipts to do this Udoka Farms certificate to open an account. The first in the bank will ask you to go and bring a TIN number. That shows you that you are a taxable person. The bank, you say, go and bring a TIN number. You go to tax office and say, I just registered this company. They press their computer, they register you for tax and issue a TIN number to you. You go and submit to your bank. Now, all transactions you are doing in that account is being viewed by Inland Revenue because of you have identified yourself with a TIN number. So what you will do is that every month, you file your VAT return. You go and waste their stationery. Total sell, nil. Total whatever, nil. VAT, you do, nil. They stamp it for you, you go home. You are avoiding 50,000. But when you feel nothing will happen, one day something will happen. That day you now start calling devil that was sleeping when you refuse to file.
So network went bad along the line. Network went bad along the line. Did not hear you. Sorry. You said when you go to bank will ask for TIN number. I stopped there. Network went bad.
Definitely, they will ask you. Yeah, they will ask you for TIN number. When they ask you for TIN number, you collect that TIN number. That means they have you have already registered for tax. Can you open even a business name account without a TIN number? Then your BVN and your TIN number is connected. If the tax office Google your BVN, they know how many bank accounts you have. But that one just are not knowing.
Okay.
The only thing is that we are too much. They don't know where to start. But they're getting small. Maybe after our age, the next age, everybody there enter well. You understand what I'm saying? But why not prepare to avoid embarrassment? Because you can still manage it within the context of the law.
So what can be done now, sir? Because my business was opened in 2017, registered in 2017, was registered in 2017 rather, and then the thing in 2017, and I've not submitted anything till now. So
what we are doing today is for general purpose. If you want anything for that general purpose, chat me privately.
Okay, sir. Go ahead. Thank you, sir.
Okay.
Any questions? Any other questions?
Yes, sir.
Cool.
Yes, sir.
Vivian. Okay, go ahead, please.
Okay, my question is not a question. It's just
Yeah, go ahead.
I want to beg of you, sir. Can you send us your PDF of what you just sent? So because some things people say we have to.
Yeah, I will share it. I will share the PDF.
Okay, I'll be so grateful, sir.
I will share the PDF. I'm sure it's available. It's available to all of you.
Yes,
it's meant
sir.
for you.
Thank you very much, sir.
You can make it. Everybody can see it. I will share
thank you very much.
You can use it as your task guide. As you are doing your business, it is a guide.
Okay, sir.
Thank you very much, sir. Maybe through WhatsApp. Maybe you send it to me through WhatsApp, and I'll forward it to them, so all of them will get it.
I don't know. You just tell me how to get a link.
Okay, sir. Thank you very much, sir.
You will have it.
Please,
and later after this program, it will be with you people.
All right, sir. Thank you, sir.
Yes,
all right, sir. Yeah.
Then when you go through anything that is confusing you, but you know tax is a course. You cannot just learn it under 30 minutes. But what I did is to give you a guide so that you will be able to know. You don't run into, I don't know, or had I know. In abroad, many people run into heavy. You see many frivolous going for jail because of simple tax return. Not that they're owing, but they didn't file their returns. And they will go and serve government. So here you will say they're not doing it, they're not doing anything. But like last year, many companies' accounts were frozen. Many, including even Dangote accounts, was frozen. Everybody went to Abuja and was trying to answer present before you can withdraw ₦1 from your account. So we are getting there, and you, the younger people, should know that if you get it right at start, you don't fear anybody. There's nothing there. These things we talk that will cost you 50,000 may not cost you up to 5,000 for the whole year to manage. It's when you fail to manage it. Okay.
So no, sir, please, there might be more. There might be more questions. Any more questions? Hello. So in the next 30 seconds, so as you know what question, if nobody raised his hand up or unmute himself to speak, I hope everybody is on presenter mode. If you have a question and you can't, speak, then you actually chat, because in the next few seconds we'll have to assume no questions and give our thanks to our guest speaker, a very, 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 very big professional in the audit and tax space. I was actually hoping he will also talk about audit, but time, I guess time is not enough to handle both briefly at the same time.
No. Well, actually, that's the only thing that is in audit is internal control. Okay. When you are doing, to me, your audit is your personal self-discipline, because audit is a different ball game. The only thing is that don't go to that wedding with the checkbook of your company. Go with your personal checkbook. But when you want to say you mix up the two, that's where audit comes in. Audit is simple self-discipline. And when we are talking about audit, there's nothing there more that when I employ you to manage my company, at the end of the day, I find another person to go and check what you have done for me. You have already submitted your report to me. I check another person to go and confirm. That's what you call audit. But your own internal audit to make sure that you have a procedure where family affairs and business affairs don't mix together. The boardroom meeting should be in the boardroom and not in the bedroom. You understand? But when it is in bedroom, better decision may not be taken. The way you now go to the boardroom, it will be confusion. That's just what audit is all about.
You're right.
You understand?
We know absolutely there is no every individual that has come up on board on this event today has gained a whole lot, and there are obviously so much more to say, but the basics have been cleared, and then you also have the, just like Chukwuebuka mentioned, will be sent to you the PDF files. We want to say a very big thank you, sir. We have today a very, very grand professional in the field of tax and audit. You be rest assured of that, and hope it's also just he has handled excellently the basics and a little deeper than the basics on what we need to know as startups in terms of running a business. Hello, sir.
Yeah, there's no problem. I'm still available any other time, but I need at least a notice to be able to.
Thank you very much.
Maybe that's how we can talk about audit and international.
Okay, sir. Thank you very much, sir. We appreciate for taking time out of the vision to be with us today. We are very grateful. Thank you very much, sir. Everybody, who is question time?
One last question, sir.
Be quick about it.
Okay. So, can I link up with you on LinkedIn? Can I get the connect? Like, can I get to your LinkedIn here?
All those ones are private chats. You can link up that.
Just send me your name on LinkedIn. Is it the same picture also?
Yeah, you send it to me. Emeka Uzodimma and Co.
Alright, sir. I'll do that right away, sir. Thank you very much, sir. Thank you, sir. Alright.
We are very grateful, sir. Thank you. On behalf of Startup Grind, I say a big thank you, sir. Thank you very much, sir. And HULT PRIZE, your network, and then Run Nigeria Hub. We are saying a very big thank you. Thank you very much, sir.
Thank you very much, sir.
Okay, thank you. Bye-bye. Okay, bye-bye.
To our cohorts here present, we thank you for participating. Hope it was very, very insightful. Tax is very important, very, very important. You know, a whole lot you don't know. Even those of us that have already started business for quite some time, some things, obviously, I just learned. And if care is not taken, I'm already owing government something close to 1 million naira. So I have to go and put myself in order and be the expert so that I'll be helped. So get help on time, engage a professional in the business, engage a professional. That's why it's good to attend workshops so you get informed. Workshops are not just, people think it's a waste of time, but it's not. It's only down here we do that. It's absolutely very important. It's always important to engage an expert in different spheres of the business. Tax very important, audit very important, like you mentioned, is the means of infusing discipline and structure to the business. So you separate you as a person from the business as a separate individual. And then the boardroom should be decisions would not be made in your bedroom. And these are the takeouts of this. One of the takeouts of this workshop today. So I want to say a very big thank you. We'll be sharing a brief video to also introduce to you guys our partners in this workshop, the Amazon Web Services. Sometimes we play the videos and then it's not quite clear. But then you listen briefly, this one will be clear, then we'll wrap it all up. So many people are not here, they've missed a whole lot, obviously. You can see they've missed a lot. Very, very insightful, very, very insightful information was given to you guys, and now you can get better equipped and know what to do as a startup. So if we can now, we'll just pay brief attention to the video and we'll be expecting it to be up and running immediately. Chisom, can we have the video now? And then while it's being done, we'd like to just reiterate again that this event is being organized by Startup Grind, which is the world's largest community of entrepreneurs, of startups, of founders, of innovators, of creators, headquartered in Silicon Valley, United States. And what we are about is just to bring together like-minded, yet diverse individuals, to get them to connect together, to learn, to teach them, help them build and to boost their business and then get connected to where they belong. Because many a time in life we just get friends based on where we are located, not necessarily because of the mindset we share together. So that is that for that. I hope I don't know if I'm being heard, and I don't know if somebody is bringing up the video. So we do this very daily through our local events done every month, and through our flagship conferences which we hold every year. We hold annual conferences, local conferences, annual conferences at United States and headquarters.